Welcome to Subramani. Playing a sport has a lot of advantages while investing. The most important thing being you understand the resources that you have, the capability to use a beautiful Hindi word, aukat, and the event or the market actually shows you your aukat very quickly. So if I'm a runner, if I'm a reasonable runner, then I expect to do my half marathon in 2 hours 20 minutes, 2.5 hours. If I am a decent runner, then I should be doing it in about 2 hours 5 minutes. And also please remember, as my age increases, my speed will go down. I'll have good stamina, but I may not have great speed, so strength will go down. So this is bound to happen. So in a sports event like say running or cycling, do I have expectations that I would be the fastest, I would be the greatest, I would be the best, when given my capability, given my age, given my resources, given my training, I am no patch on the world champion, right? So let's compare oneself. If this is the world champion, you end up somewhere here, because this could make a huge gap, whether it is in tennis, whether it is in cricket, whether it is in running, it doesn't really matter. However, when it comes to investing, you will find articles. Just go to Google and search how to invest like Warren Buffett or how to invest like Mukesh Ambani. I mean, you don't find an article which says how to bat like Sachin Tendulkar, right? You want to play cricket, that's fine. You play during the weekends. You know that you're not as resourceful as anywhere near their resources. You don't have the talent, the time, the effort, the resources, nothing. So if you can pin your expectation to the resources and effort that you put, then I think you should get more sensible in your investing. Not that you can't get those kind of results, but it requires that kind of an effort. To get the results of Berkshire Hathaway, you have to be Berkshire Hathaway. You cannot be like Berkshire Hathaway and get results like Berkshire Hathaway. You just can't. You don't compare yourself to that level, right? We don't compare ourselves. When we start batting, we don't suddenly feel that we will be selected in the Indian team and we will start playing for them, right? So when you don't have such expectation in sport, why should you have such expectations while investing? So 2-3 things are very useful. If you are a long-term equity investor, patience is very useful. It takes time for a company to be built, right? So if you bought Colgate in 1977 at the time of the IPO, you just looked at it and said, does India have a big market for oral products, right? And you said the answer was yes, so you bought the share. And from 1977 to 2022, which is 33 plus 22, which is 55 years, things have not really changed much. You don't have to you don't have to worry about whether the market size has increased, market size has decreased. Everything has happened. Whether they will introduce new products, all those things are in place, right? So if you need long-term view of the industry in which you are investing, at the same time, you also need the humility to have asset allocation, because you know that you don't know how the market will behave in the short run, and you could have cash implications. You may want cash. So therefore, asset allocation. It's as simple as that. And so to keep money in cash does not mean you're a bad investor. It just means you understand and accept that the markets can do something different from what you think it will do. You are always bullish. You think the market will do well in the long run. That's great. But in the short run, there could be an Ukraine war, there could be an oil price hike, there could be any of those things which could suddenly put the market in a tizzy. And it is always nice to have some cash in hand to be putting into the market at a time when the market goes down, right? So for all these reasons, you need some cash in your hand. And cash in hand comes from the acceptance that you don't know what the market is going to do, right? So you need patience for being a good equity investor, and you need humility to be holding cash. When I'm just making two class of assets, equity and cash. I'm not talking about bonds. Maybe you keep some bonds to have some stability in your income, especially if you're a retired person. That is also possible that it functions that role. But I'm generally talking about equity and cash. Cash, because you are humble enough to accept, you have the humility to accept that you don't know what the market will do. Also to meet short-term requirement, because in the long run we are all bullish, right? So that is how one needs to look at things, and this got nothing to do with the war. What really leads to happiness is when you allocate resources as per your capability. You are living in reality, so that is a good thing, and that is I find it very difficult. Recently I lost a friend. He has a son who is challenged, and he had not done much for how the son is going to manage the money. I don't know how the wife is going to handle it herself. He kept on, he was in denial. He used to say things like, I did it for myself. But if your son is challenged, you have to do something, right? So in being in denial doesn't really help, and so delaying your gratification, having a buffer, spending less than what you earn, these are nice ways to make sure that you are in a position of strength and position of happiness. Unfortunately, people think they can think big. All these American websites about magical thinking. You think big, think big things will happen. They keep saying that, and they spend much more than what they earn, or rather they spend equal to what they earn. They have zero savings, and at any point in time, even at the age of 32, they could have a credit card debt which they are paying in installments. Now this is not a great way to be in the wealth or to be creating wealth for yourself and for your family. So be realistic about what you are capable of doing. Then fir lage raho. That's all. That's what you have to do. You don't have to. I don't think there is too much brain work required. As simple things as earn well, spend less, invest the difference. This is all that you have to do. Make sure that there are no roadblocks. So take some term insurance, take some critical insurance. Here is a one-line summary of what you need to do for your for the wealth creation process. But yes, like I said, patience for equity. And humility to hold enough cash. These are two things which are important. Let us look at some more things. One more thing which happens is, over a long period of time, if you've had a bull run, then you forget all the lessons of a bear run. So like the American kids who were there in 1929 are today dead, right? So their learnings of how to behave in a depression is lost. Similarly, people forget how India behaved between say 1996 and 2003. It was a disastrous market. If you were in mutual fund sales or anywhere, you did not get any bonus, you were not doing well, you were worried, you thought the world is going to come to an end. And 2003 to 2007 was mother of all bull runs. Though if you would listen to some of our big heavy experts on television, they keep saying that the mother of all bull runs is about to start in 2022. Well, we heard this in 2017, 18, 19, 20, 21. COVID had other plans, and now we are hearing that the mother of bull runs is about to start in India now. I don't know, I'm not getting into an argument about that. I understand, I don't know, and I'm happy about that, right? So I also think that patience is very, very underrated. It's like you're looking at McGrath and saying, what did McGrath do, or what did Bumrah do? He took one red ball and he just kept on bowling at the stumps. That's all. He did it at 144 kilometers per hour, and that is a magnificent speed. And if you can do it, you could be the world's greatest fast bowler, right? Keep on pitching the ball at the off stump, and make sure that there's no ball down the leg side for him to score freely. The batsman is going to be in trouble at some stage. He'll, out of impatience or out of lack of ability to hold on there for long enough, he'll go away. So what makes Rahul Dravid a great batsman is patience. What makes even Cheteshwar Pujara a good batsman, it is patience. You need patience to be sitting there in the middle of the game, in the middle of the pitch, and avoiding balls which are bad, right? So that is exactly what you have to do even as an investor. You have to be there 20, 30, 40, 50, 80 years, and you have to avoid the bad deliveries. That's all. It's all that you have to do. Time will ensure that you make money. If you are smarter, then you will make a little higher money if your R is good, but most people will end up making market returns. So it's not so bad after all. So let me share some of my personal experiences. I'm a very scared investor. Remember, I was just 30 years old when the Bombay riots took place. I attended a funeral of 13 friends in one day. Those kind of experiences. I saw Harshad from very close quarters. I would speak to some of his team members. I knew what they were buying. I knew what they were selling. It was dizzying heights. The fact that we survived 1993 is amazing, because 1993 was a time when the markets fell 46%. When the market falls 46% and you are a share broker, you are not worried about the market fall. You're worried about the fact that your income can go down. Hold your breath, by 95%, not going down by 5%, but going down by 95%. So in 1 year you earn 100 rupees, next year you earn only 5 rupees. You're very rarely prepared at the age of 30 for such a huge whipsaw kind of a thing on the market. But these are things which happen during bad times. So 1996 to 2002, nothing happens in the market. You need to diversify. You suddenly wake up to the fact that you're a chartered accountant and you do some tax related work, audit related work, and you do all that, but you can't do anything to the market, and you are questioning whether it's a great time to be in the market, whether it is worth being alive. Can you do something else? Can you take up a job? There are enough banks opening up. That was a time when HDFC Bank was recruiting. But to stick around and say, no, my investing will work and my investing will work well. We were members at National Stock Exchange. We had not yet given up the membership. So we were really wondering what to do. But you need a tremendous amount of patience to sit through such bad times. You need patience, which means you slow down. When you buy a share, you take a little more time, and understand one thing: no share goes from 0 to 100 in one day. It takes its own time. It goes from 0, 1, 2, 3, 4, 5. You get a lot of time. It is just that we ignore. We say, oh, if I bought it at 20 and sold it at 100, forget buying at 20. You could have bought at 20, 25, 27, 30, 35. At every price, you get an opportunity to buy. Sometimes it moves a little fast, but it is never overnight from 0 to 100. It doesn't really move. So it depends on the ability of your team to do some research, come out with good companies, and have the patience to hold on from 0 to 100, right? So even assuming I gave you a good share at 10 rupees, if you're very happy with the 12 rupee price at end of the year, saying, wow, I got 20% return, for you that may be good. For somebody else, he may be buying at 10 rupees and she may want to sell it at 1000 rupees. That's also perfectly all right? So all of us play this game. So when you are a long-term investor, you need patience, you need decent research to come out with good shares to buy, but you need to buy 1 or 2 shares a year. I don't have more than 30 shares in my portfolio, maybe 40 including the trading positions, but that's about all, right? So that you don't need more than that. Does it even your retirement can be very fulfilling even if you don't have enough assets. Just find some work which is not so taxing. Another important thing is if you can postpone touching your corpus for a longer period of time. For example, you retire at the age of 60, you have 1.5 crores, and you have a financial planner who says, well, for you to retire you need 3 crores. True, both of you are right. You have only 1.5. He says 3 is very important. You can do one thing: from 60 to 70, work for less taxing place, but make sure that you don't touch the corpus. So your corpus would have gone from 1.5 to 3 anyway by the time you're 70, simply because of the fact that you did not touch it during that period. Earn enough so that you don't touch the corpus. You don't have to earn so much that you have to put it into SIPs and things like that. If you have stopped contributing to your retirement fund at the age of 60, that should not worry you, provided you are sure that you will have enough work till the age of 70, so that till 70 you don't touch your corpus. That's another way of looking at things, right? Thank you.